Concept: money has always been more about perception than reality. If enough people decide that money is worth something, then suddenly it is. Recently, however, the understanding of money has become more distorted and interesting than ever before. At some point in recent history, the global economy stopped making sense. People everywhere began to think about money much differently than they had before. Figuring out what it all meant would take some time, but the early signs were impossible to miss. For one thing, hundreds of thousands of people with no background in finance suddenly began day trading the stock options of failing companies. On purpose. That last part was key. They knew there was no good reason for the stock prices of the companies they traded to rise. But rise they did, and they kept rising, frustrating the professional investors who'd taken out positions betting that the failing companies would, fail. Amateur investors earning large amounts of money by betting on failing companies was just one symbol of how the economy was shifting. OnlyFans, a social network that consisted largely of adult performers selling access to intimate videos, took off, and exhausted healthcare workers and elementary school teachers burned out from teaching virtual kindergarten suddenly discovered a much more profitable way to make a living. As the platform grew, so did the moral panic. In response, the CEO announced that sex work would soon be banned on the platform, which was a problem because the whole business was built on sex work. He eventually backed down at the demand of many of the performers, some of whom were earning far more than they ever would in a more conventional job. As one adult creator put it, "I make videos that you jerk off to. Why shouldn't I get paid?" And then, of course, there was crypto. Cryptocurrency would change the world, dude, and make us all rich in the process. At one point, the price of a single Bitcoin rose to almost $69,000. This happened the same month in which the S&P 500 stock market index had declined. Meanwhile, as token prices were at their highest in history, the best-selling non-fungible, meaning unique, one-of-a-kind, but in digital form, tokens, and of course that would be NFTs, on the largest blockchain network were drawings of apes. Some of these images sold for $1 million or more, all for a single JPEG. Even the price of gold, a currency as old as time, saw a 25% spike. The value of all these assets, it seemed, had become completely untethered from their real-world value and from the rest of the economy. None of it made any sense, at least as long as you applied the old ways of thinking. Many people jumped on the bandwagon, while many others declared it a bubble and dismissed it entirely. Whichever camp you fell into, one thing was clear. It was time to start thinking differently about how money works. This book is about thinking differently.